Welcome to Tutaways. This is Mr. Dessa speaking. Uh, Today we are going to be continuing with our 2024 June exam question paper. This is the second video. That is a follow-up video on the previous video that was recently uploaded on the attempt of required number one for 2024 June exam. So today we are also going to be continuing to complete the question paper, and surely by the end of today midnight all of the videos explaining each and every question of the question paper will be posted. And good words from me. All the best for preparation for your exam. So in continuing, last time we treated the required number one when we were preparing the journal entries for Toy Palace for the month ended 29th February 2024 as we required. So now we are going to be looking at the required number two, where we are going to prepare the cost of sales general ledger account of Toy Palace for the month ended 29th February 2024. So, as indicated, we are required to show the dates. We are required to show the close offs as well as balance the accounts as at the end of the period. So, to do this, let's start by first listing up. So this is for 2024 exam, 2024 exam past paper. So in order to attempt this question, we know a cost of sales account implies that we should account for the cost of selling each time we are selling. So let's go back. So remember, in point number one, they indicated that Toy Palace uses the perpetual inventory system. What does that mean? It means that the inventory account is always updated, unlike the periodic inventory system, where the inventory account is updated only after a stock count has been done. And also they indicated that we are going to be using the weighted average cost method to account for the cost of sales and inventory. So as of 31st January 2024, they indicated that Toy Palace had 4 golden snitches. So to go back to our required, we must prepare the cost of sales general ledger. So let us not miss the presentation marks. So we'll start by writing and say general sorry about that. Sorry about that. My pen was losing some energy, but let us continue. So the general ledger of Toy Palace, for the month ended 29 February 2024. So we all know how a general ledger should look like. It's simply recognized and known as a T account. So we are going to be having a T account there. So for the purpose of the example, I'll be explaining mainly the calculations. So I will be ignoring the fact of the dates, but I'm only explaining on the calculations, how we should account for the cost of sales, and as follows. So our T account will be looking nicely like that. We know we're going to write, so we'll be opening the cost of sales account, and we know we have this side, the debit side, and we have the credit side. Now, below, it's just indicate workings. Workings are very important to be indicated so that we are able to earn all the marks as well as the part marks. Now, let's go back. So we are required to prepare for the month ended 29th February 2024. Now, let us go back. If we go back to the required point as indicated in the thing, we should be able to account for cost of sales as required. And we are accounting the cost of sales account for the month ended 2024. Now, we know that we are going to be using the perpetual inventory system as well as the weighted average cost, like that. So, obviously, first we should start by the opening balance of the cost of sales. So, we know that the closing balance of the previous month is the opening balance for the following month. So if we have the closing balance at 31st January of the cost of sales, that will automatically be the opening balance of cost of sales for the month of February. So we're going to write 1st of February 2024. We have a balance brought down of a value of how much? Of a value of 84 to 10. So this is the value of the balance of 84 to 10. Now, then we need to account for the cost of sales each time we have a transaction that affects the cost of sale ledger account. So let's go to point number 2. In point number 2, remember that as stated in required number 1, Toll Palace purchased an additional 120 golden snitches on credit from Snape Ltd, each snitch costing 160 rand. So the total number of snitches purchased of 420, they included additional units received because of the promotion. Additionally, Snape charged a delivery fee of 260 rand for delivering this thing. So in our workings, we need to use this table because when we are using the weighted average cost method, we need to always be careful and account for the cost, the weighted average cost at that point of time, because always the weighted average cost changes according to the purchases made at that point of time. So we can create a very nice systematic table like this. So it can be, sorry, so going to have something like this. So we can also have section for item description. We can have a section for the unit cost, the section for the cost, as well as the unit cost. So here we can include the items. Here we can include the unit. Here we can include the cost of the unit, and here we can include the weighted average cost. So we can use a systematic way of calculating this using this table. Now, so we always will start with the opening balance. So this example is going to be the opening units. So remember in point number 1, they told us that as of 31st January 2024, Toy Palace had 40 golden niches in stock. So to apply that, we know that the units at the beginning, we had 40 units in the beginning month of February. Now the cost of this unit, they said, we need to calculate it based on that thing. So we need to check. So the cost of the unit, we are going to get the value from the inventory amount, which amounts to 4,800. So the cost of these 40 units was 4,800. So the weighted average point at that time will be to take the cost of the unit divided by the number of units, which is going to be 4,800 divided by 40. The cost at the beginning, the weighted average cost was 120 rand. Now, on the second point, we bought additional 120 units. So we can write description and say purchases. So we can write as purchases. So our purchases, we bought extra 120 units. Remember, they included promotional units as well, the units we actually paid for, because the promotion was on the basis of if you buy 2, you get 3. So it's going to be 120 additional units. But now, the cost of these 120 units, as we accounted for in required number 1, if you remember very well, because we calculated the cost based on the number of units that we actually paid for, which were 80 units that were multiplied by the unit cost of 160 plus 160 rand, which gave us 13,160 rand. So at this point, these are the additional units we bought at this point. So one thing you should know, we are going to account for the weighted average cost before we recognize that we are going to make a sale, because the weighted average cost always changes along the purchases that are made timelessly according to the transactions as they make. Now, so we're then reaching point number two. So point number three says Wonderley Primary School, a customer settled their account on 12 February. They were granted a 10% settlement discount for paying within 15 days of their purchase. Toy Palace estimated the time of the sale that Wonderland Primary pay within 15 days. So this kind of transaction is a customer settling the account. Therefore, there is no effect on the cost of sale because no actual sale occurred at this point. And there are no effects on the changes of the inventory we have on hand. So let's go to point number four. Point number four, on the 14th of February, Funland Montessori placed an order for 63 gold snitch at a unit price of 200. Toy Palace delivered the toys to Funland Montessori on 18 February 2024. However, as of 29 February 2024, Funland Montessori had not made the payment. So in this case, we provided units, which means we sold something on credit. So we need to account for cost of sales. So if you want to account the cost of sales, let us first track what is the weighted average cost before that transaction occurred. So to track it, here, we must use the formula to calculate and track the weighted average cost. So at this moment, let's check how many units we have on hand. So the units we have on hand are going to be 160 units. Then let's check the value of those 160 units, which is 4,800 plus 13,160. So to get these values, we add both of these values. So we get 17,960 rand. So we know that the weighted average cost is always calculated on the basis of the value of the stock divided by the number of units available. So which means we're going to say 17,160 divided by 160. So in this point, I'm getting 112.25, in which, when you remember very well, we said all amounts must be rounded to the nearest rand, which is going to be 112. So this is the weighted average cost we use in order to measure our inventory. So if this is the weighted average cost, we can use this amount to account for the cost of sales. Remember, on the point number four, we Funland Montessori placed an order for 63 golden snitches. So it means 63 golden snitches left our warehouse, which means we have to subtract that. So we can say sales, then we can say sales minus 63. Now, what is the cost of the 63? We must use the weighted average cost. So I'm going to say 63 multiplied by 112, which is going to give us 1756. So this is the first effect of that. This is the first transaction that will affect our cost of sales directly, which is by 1756. So we can go back to update our um, our cost of sales account. So as we provided a sale, we need to also account for sale as we are using the perpetual inventory system. So at this point, because we sold on credit, we know that the relevant corresponding account will be what? Uh, so be account receivable. Account receivable by the value of how much is calculated by the value of 7056. 7056, because this is the cost of selling. Now let's update our books. So let's calculate what are the remaining amounts after we've deducted it. So far, if we track the number of units left, we are going to say 160 units minus 63. So currently we have 97 units on hand. Then let's check the value of stock. So also this amount should be subtracted from the value of inventory by 17,960 minus 7056. So now we currently are on sitting on 10,904. Okay, let's extend our table so we can also account for the following effects on the transaction that actually occurred. Now, continuing to point number 5, Toy Palace took advantage of a clearance sale by Fan Toys Ltd, a registered vet vendor. Keynote, a registered vet vendor. On the 20th of February 2024, Toy Palace purchased 500 golden snitches at a discount price of 90 Rand each. The payment was made in cash on the same day. So we bought something, we bought goods. And as we bought goods, because we took the advantage that they were sold at a discounted price. So it means the number of units available in our businesses will be increasing. So we can say purchases. Purchases will increase our available inventory by 500. But then we need to account what is the cost of these 500 units. What is the cost of these 500 units? The cost of the 500 units, if I can indicate, let me just write below as working number 1. So indicate how we must calculate. So it's going to be working number 1. So how we'll calculate the thing? Remember that the discounted price is what we receive from a registered vet vendor, which means it is inclusive of VAT. Remember, inventory is always measured at cost price at 100%, not at the price inclusive of VAT. So we're going to say, to calculate the value, they are going to say 500 of the units you receive multiplied by the discounted price. But this discounted price, we are only concentrating on the 100% of that price, not actually the full 90 rand, because the 90 rand is inclusive of VAT. So we need to account for only the cost of a virgin of 150. So at this point, it's going to give us, so 500 multiplied by 90 multiplied by 100 divided by 115 is going to give us 3930, and that is already rounded off to the nearest way. So the cost of this 500 units at this point is going to be 39,130. 39,130. So let us continue. 39,130. So let me try to bring this calculation below so that I do not have little space for things. So working 1, how to look at 500 multiplied by 90 multiplied by 100 over 115, which gave us 39,130, rounded off to the nearest way. Now let's continue because we're in point number 5. So now we updated our account so we can be able to work with the recent and most accurate weighted average cost. On the 6 point, on the 26th of February, Mr. Smith took 2 golden snitches for his children's use. So as Mr. Smith has taken these 2 golden snitches, it means we should deduct the value of inventory for those 2 snitches. So it means at this point, the item description is going to be drawings. So by the drawings, it means 2 golden snitches are going out. 2 golden snitches are going out. But before I account for that, let's first track what is the weighted average cost at the point. So to track that, let us extend these tables. Extend this table, create a horizontal line. So let's add. So when we add both of these cases, 597 plus this, we can be able to track what is the weighted average cost. So 97 plus 500 is simply 597. Now we need to add also the cost of 597 units, which is 10904 plus 39130, which is going to give us 50034. So we know that when we want to calculate the weighted average cost, going to say 50,034 divided by 597 units. So at this point, rounded off to the nearest rand, the weighted average cost is 84 rand. Now we go to the note that the owner took two golden snitches, so the amount of units we have will decrease. So going to say drawings, which will take the owner took 2 units. So what is the cost of these 2 units? So the cost of these 2 units goes to 2 multiplied by 84. So it's going to say 2 multiplied by the cost of these 2 units is 168 rand. So 168 rand. So at this point, we can check the amount of units we have. The amount of units we have is going to be 597 minus 2, which is 595. Then the amount of value we have at this point is 50,034 minus 168, which is going to be 49,866. 49,866. Let's continue. On point number 7, Golden Kids Club paid Toy Palace 11,715 cash on 27 as per the invoice for 50 golden snitches. These golden snitches are yet to be packed in individual branded boxes, and as of 29 February 2024, they remain undelivered. So here, there's no actual sale that occurred. It is like we received income in advance because we received income we did not earn. So there is no effect on the cost of sale at this point, because even at the end of the financial year, still this inventory remained on our premises. Now let's continue to the third point, to the eighth point. Now on the eighth point, they say that a stock count conducted at Toy Palace store on 29 February 2024 revealed that a total of 570 golden snitches are on hand in Toys Palace inventory. Further investigation revealed that 20 golden snitches had been given to AR Toys and Game, a toy store on consignment, meaning there's a principal and agency principle applied at that point. At the start of February 2024, AR Toys and Games confirmed that all 20 golden snitches were still in their store, which means they did not sell them. So we still need to recognize the value of inventory in our books, as there was no changes in their units. They did not even sell it at that point. So to account for this thing, because you remember a stock count is leading us to the fact that we may have to perform some adjustments. So for example, we say the eighth point, so we must perform some adjustments, right? So to perform some adjustments, we know that we're going to say this is the stock count and this is the record on books. So currently on our books, we are saying we have 595 units. So we have 595 according to our books. But according to the stock count, we have 570. And also we know that 20 the snitches we have given to AR Toys to be sold on consignment are still existing. Which means according to the stock count full analysis, we have 590 units. So it means on our book we had more, and on the stock count we have less, meaning we have flaw five we can call it this five trade deficit, because this is a stock deficit, because this is stock that is lost. Whenever we have more on our records and less on our stock count, it means whatever we had is not true reflection of what we had, meaning errors might have occurred, fraud might have been occurring. So at this point, it means we should adjust our records up to 590. To adjust them, we need to deduct the value of trade receivables. So we know that 5 units should be taken out because this is a stock loss. This is the stock loss for this moment. So it's going to minus 5 units. Now, what is the cost of the current unit at present? To calculate the cost of the current unit at present, we need to say 49,866. We know that the current cost of this unit is going to be 84 rand, because there are no changes that have happened since then. So it's going to be um, 49,866 divided by 5 divided by 595 at this point. So the cost is still weighted average cost is still at 84 rand. So it means you must account for this, or say minus 5 times 84, which is going to be 420. It is going to be 420, right? So this is a stock loss because this stock needs someone to account how it was deducted. So at this point, if we're going to track the available stock in our premises, it means we have 590 units. Then we're going to say 49,866 minus 420, meaning we only have 49446 at this point. Now, we are going to continue accounted as well, but this we need to learn how it should be treated. So also on note number 9, uh, they say during the stock count, it was noted that 50 of the golden snitches on hand had damaged packaging. Mr. Smith noted that he would only be able to sell this at a discounted price of 80 rand each, which is VAT exclusive, meaning we don't have to worry to bring it into a VAT exclusive. Already is on VAT exclusive. So the ninth point, we know that according to this, 50 snitches were damaged. So now we need to track down the net realizable value of these goods so that we can record it at that cost. So we know that our cost of inventory current is 84 rand, and they're saying that if they are able to sell this thing and repair it, they were able to sell it at 84 rand. So they were able to sell it for rand. So it's initial cost, selling cost. So it means at this point we are going to suffer a loss of 4 rand because that's the difference between the two. So it's 4 rand. So it means for 4 rand, this is going to be the loss that we are going to have regarding stock losses. So it's going to be 4 multiplied by the number of goods that were damaged. So it's 4 multiplied by 50, which will give us a value of 200 rand because this is the value of these goods. Now we know that this is the value of this good. These are stock losses. Now, when you go to the point number 10, Toy Palace accounts for stock losses as part of cost of sales. So we account for stock losses as part of cost of sales, which means we need to update the inventory, update the cost of sale account because point number 8 and point number 9 speaks on stock losses that we actually lost, speak on the stock losses that we actually were not able to do. Because if you remember very well, it's retaining to this point as well as this point. So it means the total stock loss is going to be 200 plus 420. In total is going to be 620. This is a stock loss. So this stock loss, we need to account for it. So we are supposed to account it as a separate expense, but they say it is going to be accounted on the cost of sale ledger. So we need to go back to our cost of sale ledger and account for the stock loss. So remember, the stock loss is coming due to from the account of inventory because we are using a perpetual inventory system. So the relevant account can write an inventory or can say stock loss. So it's going to be the value calculated, which is 620. So it's going to be 620. So if you continue reading transaction number 11, then no effects that are relevant to touching cost of sales, as well as transaction 12, as well as you go on the second page, that is question 2. So we can be able to adjust for the cost of sales account as required. So to adjust for it, we know we're going to draw a nice beautiful account. Add all these figures: 84 210 plus 75 plus 620, which is going to give us a sum of 91,886. also 91,886. So this is going to be our balance carried down of this cost of sales account 91,886. So we have accounted for our cost of sales account. Thank you very much.